Hi, my name's Marie and I'm an associate partner in the financial planning team at Parry. So in terms of personal planning, it's likely that wealth in the form of investments, pensions, and generational transfer of assets could get mentioned in the budget. And this really mirrors some of the concerns we're seeing from clients. First, thinking about capital gains tax, there is a potential to increase this in the budget, and this is a big concern for clients. However, the government needs to be careful how quickly and dramatically they make these changes, because unlike income, capital gains can be managed flexibly to limit the amount of tax that's paid. In fact, some government modelling predicts that many strategies for increasing capital gains tax would actually result in lower revenue. So if your financial plan involves selling an asset at some time in the near future, it may be wise to consider completing this sale prior to the budget. Particularly given Keir Starmer's recent comments, it's unlikely capital gains tax is going to go down. But there are also some additional capital gains tax management strategies you can consider. For example, transferring assets between spouses, so the gain is realised by a partner with a lower rate of tax, but also making sure you're making use of each other's capital gains tax allowances, ISA allowances and pension allowances as well to maximise the amount of assets held in tax-efficient accounts. Moving on to inheritance tax, again, this is another key target for tax increase, and it goes with the higher trend of higher inheritance tax revenues. So again, it's an area of concern for our clients. The Chancellor may look to review the list of exemptions, such as business property relief, agricultural relief, for example. But she may also want to look at the current gifting regime, which effectively allows anybody to avoid inheritance tax completely if they make a gift and survive for 7 years thereafter. But much like capital gains tax, preemptive action on inheritance tax should only be considered if it's already part of your financial plan. If you've got gifts that you plan to make in the short term, you may want to consider making them before the 30th of October, just in case. Thinking about pensions now, so this is one of the few areas that have been specifically highlighted for change. And this has got a lot of people concerned, and there's quite a bit of a speculation in this area. The current pension system benefits from a large range of tax advantages with tax-free growth, tax relief on contributions, the ability to access a tax-free lump sum at the qualifying age, and also complete exemption from inheritance tax. One area of potential reform has been suggested is a flat rate of pension tax relief. So the current system allows for higher and additional rate tax relief via your tax return. Another point to note really is that Labour did confirm during the election campaign that the ability to withdraw the 25% tax-free lump sum from your pension was a permanent feature of the tax system moving forward. So it would be a surprise if they look to change that. But again, it's a question that we're getting asked quite a bit from clients at the moment. So in terms of actions on pensions, there's still some relatively generous pension contribution strategies available, such as the ability to put in 60,000 a year in the current tax year and carry forward unused allowances from the prior 3 years. So review your current pension strategy and consider making any planned contributions before the budget. But remember, pensions are a form of investment, so the value of those can go up and down. And again, moving on to ISAs. So ISAs are a bit of a use it or lose it allowance that protects your cash savings and investments from tax. There is the possibility that ISAs themselves could be cut in the budget, or maybe some form of lifetime limit was put on them. So again, if it's something you can afford and you're happy to contribute, then maximise your ISAs before the budget. And just a final word of advice, really. It's important to ensure that you don't let potential tax amendments change your financial plan. Investors should be driven by making the right investment decisions and not speculating on what might happen in the budget. A financial plan should remain flexible and adaptable to ensure that any announcements don't stop you reaching your financial goals.